And we are live. Welcome back, Crypto Warriors, to the Gemini Crypto episode 467. Today is Tuesday, September 10th, and I'm King, of course, here to bridge the gap between the community and crypto every day, Monday through Friday. A lot of good stories today. Of course, we'll be talking about Winklevoss twins Gemini crypto exchange launching custody service. ICE releasing initial margin limits for BACS coming futures trading. Trading Bitcoin is hard. 10 things every beginner trader must know. And last but not least, Bitcoin is a truth machine, says Gold Bullion International co-founder. So a lot of good stuff. I'm actually waiting for this stream to fully load. We'll see what happens. YouTube is changing up a lot of its stuff on me, so I'm not sure it even processed the correct way. So I don't know. We'll see here. Un momento. But of course, let's go ahead and talk about these prices. What's going on? Crypto blood in the house. Tiffany from New York. Tessa, hello everyone. Marcellus Hall. Tony Nolly, what's going on? What's going on? Malik Howard. Yeah, Crypto Blood. These are the Cryptic Coin hoodies we use to give away our free Cryptic Coin, an educational and privacy coin out there. We got the QR code on the sleeve. All the little giz and gadgets in the hoodie, the Cryptic Coin, sign, signal. So definitely repping for them. But of course, go ahead and jump into this price again. I am trying to also at the same time bring up this YouTube chat because I tried to use the new YouTube studio, and if for whatever reason it is not working like I wanted to. But on to these prices. Today's price, Bitcoin, we're looking at $10,000, about $110 is down 1.86%. Ethereum's at $179.89, down 0.35%. I forgot, can't do that right now. Litecoin's at $70. It is up 1.67%. Ripple XRP is at 25 cents, down 0.59%. And Bcash is sitting at $304, down 0.47%. So, yeah, I mean, again, not a lot of price movement. We've been talking about this every day. Again, don't expect to see any new price movement, at least not until the back futures are actually launched. And again, I'll actually give it a few days after that for the price to actually stabilize or normalize out a bit. So again, I'm not going to be looking for new prices in the Bitcoin crypto space until, I don't know, probably toward the end of the month, if not actually going into October. I think that's when we'll see a noticeable difference because as you're seeing every day right now, we're just swaying back and forth at this same current price of 10,000 and some change. So does not look like I will be able to bring up this YouTube studio. Come on, it's taking forever. So if anything's wrong in the notes or the title, I make sure I will change it later. All right. Pangy Smoke, what's going on? All right, top story of the day. Winklevoss is back in the news. Winklevoss Gemini crypto exchange launches custody service. If you've already seen this article, it reads more like Winklevoss twins is officially opening the bank. The New York-based crypto exchange Gemini, founded in 2014 by twin brothers Cameron and Tyler Winklevoss, has launched its own custody service, Gemini Custody. This news release was shared with Cointelegraph today, September 10th. Gemini said that the newly launched custody solution will allow its customers to check balances, download account statements, initiate withdrawals, and grant auditors view-only access to confirm balances, transactions, activity. I actually like that last part because I'm thinking that part's more for institutions, possibly even small businesses that are using cryptocurrency in their business, possibly even storing cryptocurrency with the hopes of Gemini saying, hey, you guys can use us for your crypto business. You can store your crypto with us. We have this custody solution. And for all those who want to actually take a peek inside of your wallet, they're saying, hey, you can get it from a regulated exchange, a regulated customer compliant or whatever compliant exchange out there from our custody exchange, and we can give view-only access to all these people who come looking. So the IRS or government want to take a peek at your crypto holdings if you're a business, or if some of your investors, we talk about the likes of TD Ameritrade getting into crypto, or even some of these other investment platforms that are already out there, and someone, a customer, an investor wants to go to that company and say, hey, I want to know how much money I have left. Well, you can't give them the private keys. So using Gemini's custody service, hopefully you'll be able to just give them that view-only access. It looks like customers will also be able to trade their assets in custody on the Gemini exchange without waiting for them to be transferred from cold storage. We've kind of seen this on other exchanges as well. I'm assuming they're only kind of there. I mean, it's a numbers thing. It's basically an algorithm that figures out the numbers of how much can each person trade, and if they lose it or gain it and want to pull it out, how much could they actually trade without the exchange having to go into his reserves, right? They account for all that. It's a sense of fractional reserve banking because they're kind of already telling you, they're gonna have some stuff in custody and some stuff out. That means that they don't have everything all in the same place, which of course is a good thing. When you talk about hacks and all that stuff, but again, it's kind of a fractional reserve system as well because they're saying we don't have it all available for you at once. But for, again, certain accounts, certain limits, you'll be able to actually trade while they actually have your custody. They're going to support 18 cryptocurrencies. Of course, the normal ones: Bitcoin, Bcash, Ethereum, Litecoin. A lot of ERC tokens they mentioned here: 0x, Augur Rep, BAT, Bread, DAI, Decentraland. Oh, a couple interesting ones: Engine, Flexicoin, Gemini Dollar, of course, Kyber Network. Haven't heard that name in a while. Loom Network, Maker, and Amis Go. Another name I haven't heard in a while. And again, Gemini CEO Tyler Winklevoss actually made a statement. He was basically saying from day one, Gemini recognized the need for a world-class custody solution that is secure, compliant, easy to use for individuals and institutions around the world. All right, so of course for individuals, my main thing is that you don't need this unless you're like a multi-billionaire who just for whatever reason cannot trust him or herself with their own money, and you want to give it to a third party to take that fee and to tax you on it, then whatever. I think it's mostly going to be used for organizations and institutions again, especially those who don't want the risk. Those who say, hey, I can't keep up with my cybersecurity, or I just don't even want the risk of something happening to all this money or crypto assets, then my customers and clients getting mad at me and blaming me. They might say, hey, I'd rather store everything with Gemini. That way, if something goes wrong, we all can go after Gemini together. We all can sue them. We all can figure it out. And I'm not the one to blame. They're the one to blame. So it's kind of that third party. It's like third party compliance. When you talk about the AML KYC laws governing the crypto land that came out the blue, anti-money laundering and know your customer. Most exchanges don't have in-house KYC AML officers, right? They might have one compliance officer. You think of Coinbase, Gemini, Binance, some of these bigger companies that can afford to hire a regulator or compliance officer paying them $150K a year. They might have it, but by and large, they won't. A good example is this. We always talk about the show Billions. If you've ever seen the show Billions, I can't think of the guy's name, but he joined the team, the billionaires team, Ace from Billions, whatever his name is. He joined his team late, but they hired him as the compliance officer. And he's basically a part of the executive team. He runs around with them. He gets on everybody's nerves. But when it's time for him to be serious, he can literally clear out the room and say, no, we're not doing this. Or if you do this, I am recording that I told you not to do it and I'm leaving the room. But at the end of the day, he does have actually a lot of power at the company in the TV show Billions. Again, that's about a hedge fund. It's supposed to be the basis of some of the hedge funds, one big hedge fund manager specifically out of New York. And they're showing you that, hey, compliance officers are a part of an actual company or a part of a hedge fund. They're in the C-suite. They have their private office. They have their parking space. They're making a ton of money because what they say or what they don't say, if they don't do their job the correct way, it can literally end your company. So again, for some of the companies that can afford these compliance officers and all that good stuff, I see the smaller companies and smaller institutions pushing a lot of their business that way. You talk about this custody solution. That way they don't have to be held responsible. But a funny comment in the story, Scott Smith said, I'm in New York. Why would I move to this exchange with so little coins? They do not hold one coin I have. And then they said, oh, Binance, United States will not work in New York State. That is right. This is where we're talking about also using the regulators and using the laws of the land to stifle and to push out all competition. When you have Binance, their own custody service with only 17 or 18 coins, or excuse me, not Binance. You have Gemini and their custody service with 18 coins, but no competition from no one inside the entire state. That says corruption to me. But again, shout out to Gemini twins and Gemini the exchange for this big accomplishment. It is significant, but also I want them to remember: don't go crying to the community once all the feds and the regulators in New York turn on you, or find a better poster child where they can probably extract more money from and use their custody services to make yours illegal, because you're basically doing the same thing. you're enforcing the same type of action. So we'll see. Let's see. Pangy Smoke, what's going on? Antonio from the UK. Leroy Forbes, Wired Sparks. Wired Sparks said, Coinbase custody is right around the corner. Exactly. That's my point. Coinbase is going to do it. If Binance decides they want to pay to play, they'll do it as well. But again, the bigger thing is this is all good for Coinbase and Gemini until you get one of the regulators who've saved up his money, his or her money, or they have enough friends in high places where they say, hey, why don't we just make our own exchange, do all of this ourselves, and take even more money home rather than messing with a couple of twin guys who already got beat out by Mike Zuck, right? And when that day happens, if that day happens, I mean, we're kind of already seeing it. This isn't far-fetched. Remember FedNow coin? Before FedNow was even announced, the regulators wanted to work with Ripple, XRP. They wanted to work with Gemini, Coinbase. They wanted to figure out all these different things of how they can do it. The day FedNow was launched was the same day the attacks on all these ICOs came out. Was the same day some of the attacks on some of the old exchanges or XRP came out. So again, sounds good for you, Gemini. I hope it works. But as you cozy up with the government, just remember, don't come back to the rest of the space asking for help when they start laying down a law that's not in your favor as well. All right, next story up. ICE releases initial margin limits for BACs coming futures trading. This is a pretty easy article. They could have just had one sentence, maybe two sentences instead of all the paragraphs that they had to tell you about ICE and BAC. It's basically something that we already know. If you don't have money, you cannot participate in this futures trade, right? This is for the wealthy. This is for the rich to get richer. It looks like the Intercontinental Exchange, ICE, has announced a tentative margin requirements for BAC, Bitcoin futures trading contracts. The announcements appeared on ICE's official website yesterday, September 9th. It looks like the future margin requirements, per the notice, the initial hedge requirement for daily and monthly futures contracts is $3,900. The speculative initial requirement for both contracts is $4,290. The intermonth add-ons for the monthly and daily future contracts are between $400 and $1,000 for the hedge rate and between $440 and $1,100 for the speculative rate. So again, as I just stated, if you don't have money, you're probably not going to be able to really trade these back futures per ICE's notice and their requirements. But the good thing about all this, the thing we keep trying to tell people about, beat that drum on, is that you don't need any of this to buy Bitcoin. How crazy is that? They are trading off the hard asset of Bitcoin by using derivatives with these margins and telling you, hey, if you don't have at least $4,000, you can't come play in this game. Meanwhile, using Bitcoin, you can have $5, $10, depending on if you're going to exchange or just doing a peer-to-peer. You can have a 50 cent and you can make that trade, right? You can have Bitcoin with $1 if you have another peer who's willing to send it to you, and you can get that transaction fee where you want, depending on which wallet you're using. Whereas, again, this margin trading, all these derivatives, this is why we don't believe in them. I get it. We get it. It makes money. It's part of the economy. But this is why the economy, from not only in the United States, but around the world, is in a tough place, because everyone wants to believe debt is actually money when it's nothing. This is what we're doing again. We're developing debt by developing all these derivatives, which people will end up owing back. This will happen. These problems happen. This contract will happen. It'll get convoluted because that's a part of the game of derivatives. It's becoming convoluted. So now you have court cases. People are getting sued. It's just more money on top of more money, when really at the end of the day, you only need to buy Bitcoin. It can solve all these futures problems. It can solve all the contract problems. It can solve all the $3,900 requirements, hedge requirements for daily and monthly futures contracts. You don't need any of that. Instead of putting that $4,000 to your daily and monthly future contracts, where your rate of return won't be the same as if you actually had the asset, you should probably just put that $4,000 into Bitcoin and forget about it for the next 5 years, and then come back and check out that price versus the price or return of interest you would have had if you actually bought that futures contract for $4,000. I mean, judging off the trend and the charts of what we had this past 10 years, I can pretty much assure you that you would make more money in Bitcoin. So again, we'll see what happens with it. This is good for mainstream adoption. It is a big base hit, so I'm not downplaying it. But I'm also saying, for those who might be left out of this back market, don't feel bad about it. Don't feel like, hey, I can't afford this. It doesn't matter anyway. This is a rich people game to get more rich people money out of their pockets. Just continue to buy the actual asset and you will be fine. Valdez Granville, what's going on? Valdez said, tell Mr. Jackson I have his book. It's phenomenally informative and inspiring. There we go. Sergeant Crypto said, YouTube algo's back at it again. Oh, man, what's going on, Sergeant Crypto? They giving you that late notice. A. Kent, what's going on? Cornelius Broad next. All right, this is a really good story I saw. I definitely want to cover this today. Trading Bitcoin is hard. 10 things every beginner trader must know. And shout out to Scott Melker for this article. I was looking at his photo here in his bio and the photo of the Cointelegraph photo. I think this is actually Scott, how he envisions himself, or maybe how he actually looks at work. I don't know. But of course, whenever I see like a trading Bitcoin article on Cointelegraph, it's like, hey, let me click on this thing and see what type of bad information they're passing out, right? I skimmed through most of this article, read through most of it, and it's a really good article, especially for beginners. So it's something that, hey, slow news day, I definitely want to hit it. Even some of the more advanced people, some of the basic things you might have forgot. But of course, this article starts off basically saying, hey, we know Bitcoin trading, crypto trading looks easy. There's been all these life-changing stories. People have turned 100-time ROIs daily, turned $1,000 to millions and all that good stuff. But, you know, one of the things this intro ends with is that 95% of all traders fail, most within a few months. They generally go completely broke or perform far worse than simply investing a lump sum in a safe investment and leaving it to grow. Hey, I agree. It's probably 95%. I remember when, you know, in 2017, when we did start to see that bull market go all the way up. I mean, I literally remember telling people about Bitcoin on Tuesday, and by like Thursday and Friday of the same week, they were pushing out videos, Twitter trades, they got bit by the bug, which of course we all have, and it's a good thing. But it was also, they were just giving out the worst advice I've ever saw. I mean, these were some of the same people in December who were hawking Ripple when it was $3. And I mean, like, really shilling it across the place. And they had only been in space for like a month or two, right? So those are most of the traders they talk about, those who just come in and literally just want to get rich quick. I see everybody else do, I can do it the same way. One of those type of deals, and they end up falling short. And here's the 10 reasons, according to Scott Melker, of why people do fall short and things you must know. Again, I agree with a lot of these. Number one, the casino never closes. That's right, something we always talk about. Another reason why the Wall Street cronies cannot catch up to the likes of myself and Bitcoin Zay is because this market is open 24/7. If it's open 24/7 and you actually dedicate 24/7 of your time to it, after 1 year, you will far surpass most people in almost every industry because, again, it never closes. The casino never closes. If you're at the casino for a year straight and it's never closed, you're going to learn some tricks in there, all right? You're going to learn how to win some games. You're going to learn how to become a better dealer. Hell, you might even learn how to make a better cocktail, right? But you're going to learn a lot of things in a short amount of time. But one of the reasons they put the market is open 24/7, giving traders the feeling that they always have to be trading. This causes tremendous fatigue and FOMO, fear of missing out, for emotional traders. And no one can effectively track a market that's perpetually available, and new traders find it difficult to step away. This often ruins both their personal lives and destroys their finances. Now, I do understand what he's saying. That FOMO is real, especially you're talking about a very volatile in the bull market. We always joke about it, not as much anymore because the market hasn't been the same as it had been a couple years ago. But yeah, when it is a bull market, I mean, yeah, of course you set your indicators, you set your stop losses, where you want to sell at, buy back in at. You make all these computed settings so you don't have to be awake and on it 24/7. But at the same time, yes, if you're trading a lot of money, this is a 24/7 job. I remember when we first started the altcoins we buy segment back in 2017. One of the things we kept saying on that is that the most trading, or some of the best trading at the time, was happening between like 12 to 1 a.m. to like 3 to 4 a.m. in the morning, every morning, because that's when some of the Asian markets were at its highest peak during that time. So usually if you were American and you weren't awake or trading during that time, you were missing out on a lot of the money you could have made, right? But at the same time, if you weren't doing it 24/7, you might not be able to dedicate 3 or 4 hours from 1 to 4 in the morning, and then later on in the afternoon again to check some things and check some settings. So casino never closes. That's something that every beginner trader definitely should know. What fundamentals? I love this one more than anything because some people, they swear up and down by TA, technical analysis only, TA this, the chart says this, the graph said that, blah, blah, blah. Oh, guess what? The regulator today all of a sudden just said this, and that destroyed every graph you just spent hours working on. It destroyed all the videos you just spent all those working hours on, and so on and so forth. It says here, the crypto market lacks fundamentals, the cornerstone of trading legacy markets. When purchasing stock, a trader can review quarterly earnings, sales reports, the company's roadmap, and countless other barometers to assess. More importantly, companies traded on the stock exchange are regulated and therefore transparent. Big lie, but I get what they're trying to say. You generally know what you're buying, which is, it's even funny. After I said big lie, they said you generally know, which means yes, we're recognizing it's a lie, but we're not going to say it. You generally know what you're buying. That part is true. Generally, you do know what you're buying. The strength of a team or project in crypto is nearly irrelevant for a trader's purposes. Traders rely on technical analysis, which is hard to use properly for newcomers to the space. All right, a few things on this one. I hate to see this, but this is something we beat the dead horse on so many times. The strength of a team or project in crypto is nearly irrelevant for a trader's purposes. We have seen this with 95% of those people who fail, and that's why they do fail. The strength of the team or project is probably one of the most important things in crypto. When you don't have all these other fundamentals, when you're talking about quarterly earnings, you might not have that. Sales reports, you don't have it. The company's roadmap is important, and we usually do have those in crypto. But countless other barometers to assess as they put you don't have. So what are some things you can go off of fundamentally when it comes to trading crypto? Myself personally, when I really was just digging deep into it, first thing I want to know is the team. All right, who's the team? What type of background do they have? What education do they have? I mean, is this guy a painter one day and then literally 2 days later came over to crypto and now he's just investment guru? Like, I don't know what's going on for this person to have this background. For Bitcoin Zay and I, when we teamed up, he had a heavy background in trading already, something that I had to learn to do and become good at. I had a background basically geopolitics. I've been traveling the world for the last few years. And together we started coming up with fundamental analysis in his TA. And we started matching together like, hey, these trades make sense for these reasons, not only from a technical level, what's been going on, but also from a fundamental level. Look at this person's team. Look at the projects they've done in the past. Look at the education. Look how many successful projects they have built and sold or are still going right now. How many projects do they have that have actually shut down after their inception? These are some of the questions we were asking because, as they say, you cannot just rely on technical analysis. I strongly dislike when I see a lot of the crypto people talk just in depth about TA. I mean, there's some very popular ones out there who do. I know Tone Vays does a really good job. I mean, don't get me wrong. There are a lot of people who do a really good job at it, but no one could predict it last year, right? So how good could it really be if you're not looking at the fundamental side? All right, top networkers grew. What's going on? What's going on? Let's see. A. Kent said, let me bring this chat up a little bit bigger. I can't see it. A. Kent said, I feel like back in 2018, the best way for me to trade and the safest was off of the 24-hour percent change by holding a parity amount across all the exchanges, or let's say Binance. Okay, I get you. I can barely see the chat today, people. I wasn't able to bring up the bigger YouTube chat, so I have to kind of mess with this on screen as we go. A. Kent said, which is why I opted not to perform technical analysis. Yeah, so for me, yeah, Jason, hey, Jason, thanks. The title is probably off today because I wasn't able to, YouTube, if you've been on YouTube later and you actually use their studio, they're trying to force you to use their new YouTube studio, and it's not ready yet. I tried to actually use it today. It's not ready yet, long story short. But yeah, the P-Man Van said TA is all speculation, so no one knows. Listen, you can, for the people who live and die by TA, you can't tell them that. They think this is, I mean, especially 2017, it was just TA, when in reality, it was just like, look, pick a coin, sit on it for a while, and watch some unknown or obscure group pump it for you and have your sell, have your sell marks up. Really, that's what it was. But yeah, I mean, something to look at. I'm making money, so why is my Bitcoin balance down? This was another big one back in 2017. Something that a lot of people are more keen to now, but the interplay between Bitcoin and altcoins adds a complicated wrinkle. Alts are rarely safe to trade, and finding opportunities requires tremendous patience and experience, both things that new traders inherently lack. That is true. New traders often mistakenly gauge the success of their trades in the USD value of the coin, not realizing that leaving their capital parked in Bitcoin would have gotten a far more profitable and been an easier strategy. Trading legacy markets with fiat is straightforward. You either make or lose dollars. This was one of the ones, Bitcoin Zay and I, we were on a podcast probably about 6 months ago. And it was actually alone. When we were on there for like an hour and a half, it was a frustrating podcast because it was just so much pushback, and the host wasn't even speaking the whole time. I'm like, why are we even here? Like, you didn't prep your guests for why we actually came on to talk about crypto after we were actually invited. It was a crazy day. But the bottom line is, this podcast, if you ever hear it, it might shine me in not the positive light because of the way I ended it. I basically just cut it short because I'm just like, look, I'm going back and forth with people talking about Bitcoin, but the only thing they wanted to know is, how does it count when it comes to USD? Well, I don't care anything about Bitcoin, technology, cryptocurrency. What is it in money, in dollar value? That's all they wanted to know. So we kept trying to explain to them, one Bitcoin is one Bitcoin. If Bitcoin goes to $200,000 of Bitcoin, you will not want to sell it because you can go get a job or you can save $200,000 no matter how long it will take. Some people, I know everyone isn't having a six-figure job. Some people might only make $20,000 a year. So what? You still have the opportunity to save to $200,000 or to do things in your life to get you to that amount. There aren't many things you can do at this point to get 200,000 Bitcoin, right? Unless you're in one of these countries where they're just shaking people upside down over their computer for it, you can't go get $200,000. So the fact that people continuously look at Bitcoin and cryptocurrencies with this USD value that we do now, I mean, we talk about it every day. Trust me, there's more for you than it is for us. But it makes no sense because that is not the end goal of Bitcoin. That's not the reason why it's here. And again, it was created because the financial market almost crashed in 2008. So if that were to actually happen, the markets do crash and the dollar does lose its value, you won't care. So the fact that we still talk about Bitcoin and its dollar amount is crazy. Again, most people do it for mainstream adoption because we know we don't do it. People will not pay any attention, but it doesn't matter, people. It truly does not matter by and large. It matters when it's under this 75, when it's under 50K, 75K, of course, you're like, hey, let's pay some bills, blah, blah, blah. But I'm telling you, when it hits that 50 plus, 75 plus, 100 plus, 200, if it ever gets there one day, as everybody suspects, it won't matter. You will not sell it. You won't want to sell it. If anything, you'll still be trying to accumulate more because it would really be in your face that, hey, one of these things is worth this much money. So think about that. How do I set up a stop loss and take profit order? We actually have a video on this. I think we did with Bittrex back in the day when we were talking about margin trading. But legacy traders have the benefit of placing stop losses and take profit orders, something I've been kind of mentioning these last few paragraphs. Trades require less babysitting and management, and crypto exchanges lack the full breadth of orders necessary to properly manage risk, especially in the market that never closes. So what they mean is it's getting better. It's definitely getting better. This year has gotten a lot better. Last year was getting better. But there used to not be all of these different APIs or these different ways to set up stop losses and take profits on exchange. So that whole part about staying up 24/7 and FOMO, you used to have to stay up 24/7, right? If you're on an exchange, especially one that you're just dumpster diving, you're like, look, I'm trying to find this crap coin right here so I can take this bad boy and flip it 100 times over. They might not have a stop loss or a way to take profit on that exchange from some of the small ones. I'm thinking of you, Cryptopia, right? I don't think Cryptopia has stop losses on them. You can buy the coins, you sell them, all that stuff. But for some coins, they didn't have the stop losses or you couldn't take profits. So you had to be on 24/7. They say here, experienced crypto traders can share countless stories about missing a huge pump while they were sleeping because they had their downside protected with a stop loss and were unable to set sell orders at their targets. That is something else that's been going on. If you do set a stop loss, more than likely you can't take profit on that same order. It's one or the other. So if I put one Bitcoin into something, I can either put, hey, when this thing reaches 0.5 Bitcoin, sell, sell, sell. Or I can put, when this thing reaches 1.5 Bitcoin, sell, sell, sell. I actually said that wrong. Excuse me. If it reaches 0.5 Bitcoin, sell. If it reaches 1.5, buy, vice versa, depending on your trading strategy, right? But what you couldn't do is the same thing at the same time. You couldn't have one Bitcoin sitting on an asset saying if this thing falls to 0.5 or to 0.75, just go ahead and sell it. But if it goes up, then go ahead and buy more or sell, or vice versa, however you want to do it, right? You could not do it. You can only do one or the other. So something to pay attention to. But as this thing ends, this paragraph ends, it said traders should never have to choose between taking profit and properly managing their risk. We shouldn't, but most places, which is why they said legacy traders, most places don't allow you to do both, unfortunately. Here was a big one right here. Hold on, let me look at some of these comments here. P-Man Vance said, TA is all speculation. No one knows for sure. Cryptonomics said, man, that Bitcoin blockchain hijack is fake news. Oh my God, they're really trying to get folks to bail on Bitcoin. Right, the way they said it was making it seem like the whole Bitcoin was hacked. All right, I can turn $10,000 into I can turn $10 into $1,000 with leverage. I actually started talking about this last by mistake, but this was a pretty funny one. Leverage trading is far too common among beginners, as this article says. Leverage is a tool that should only be used by the most experienced traders, those who have proven to be profitable for years. Now, I won't say years on it because we're only 10 years into the market. But yeah, if you haven't traded for at least 6 months to a year, you should be very careful with leverage. And also a quick note, not just about leverage, but we've been talking about technical analysis, TA, right? I will say one of the positive things about TA, or one of the ways you can use it, is that you don't always have to do your own TA, people. There are people who pride themselves on their TA in this space, right? And some will charge you, some give it away for free. You see some on Twitter, you see some on Telegram. My best suggestion for you, and what I was doing when I first really started trading, I didn't understand a lot of the TA, is I found 7 to 10 really good traders that I liked, or we had similar trades, or for whatever reason, we were trading, many of our trades were similar, right? And for me, it was like, hey, I did fundamentals on this. I looked at the team, I looked at this, I saw what date they were releasing whatever, and I made my trades based on this fundamental analysis. And they said, well, I looked at the charts and did TA, but whatever reason, we would come up with the same trades and kind of buy and sell around the same time. Those people I kind of kept in a group, and then when they released their TA, I compared their TA to each other. Again, this still takes time, but I compared their TA to each other and kind of get a basis of what that coin was going to do, right? Based on what 5 to 7 to 10 people were saying about it from different TA standpoints, different parts of the world. Some people didn't even know each other, all that good stuff. Then I added in my personal fundamental analysis on some things I thought were going on. So when it comes to TA, you don't always have to do it yourself. And it's the same thing when it comes to leverage, all right? If you haven't been trading that long, you're just trying to jump into leverage trading, margin trading. We have a video on margin trading as well, people, on our YouTube. Go back and look for it. But if you're just trying to margin trade, you're saying, hey, I'm going to throw this $100 and I'm going to go times 10 on it and see what happens. You're probably going to lose that money very quickly. But if it's a coin that's supposed to do something, whatever, in the next amount of time, and you have the money, you looked at the leverage on it, and you think you have, you can actually do this. This makes sense. The TA is pointing in this direction. The fundamental analysis is pointing in this direction. Then I understand. Use a small amount of discretionary income that you don't care losing. I mean, think about balling it up and throwing it in the trash, and that's the money you could put toward your leverage. Of course, when you talk about leverage trading, the barriers to entry are non-existent in crypto on exchanges that are built to transfer the wealth of inexperienced retail traders into the pockets of the exchanges themselves. Beginners will likely lose everything they risk trading with leverage because the downside is massively compounded. That's what people have to understand. I remember BitMEX, I think they were the first one to go like times 100 on the leverage, or 100 times leverage. It sounds good, right? It sounds great. I can put $1,000 into this thing, put this thing up to 100 times the leverage on the margin trading, and I might be able to make 10,000 back within just short amount of a week, right? Here's the flip side. The higher the leverage goes, the higher the liquidation calls go, or the smaller the liquidation calls go. So you're talking about at 100 times whatever your amount is, that thing can be as small as $1 or $2. If it slides below $1 to $2 outside that risk, basically the risk area they have for you, you will get liquidated, and they'll take all your money. They won't just take some of it. So that's the thing you have to be careful. I remember I used to margin trade on Poloniex. That is why a lot of people love Poloniex at that time. They were also one of the first few people margin trading. BitMEX had the one that goes 100. Poloniex was one of the first. And then there was another really good one that is on the tip of my tongue that I can't think of right now. Kraken. Kraken did good too. Ripple, you trade some XRP on Kraken. You can margin that thing times 5. If you caught it at a good time, it was a very, it was a good little run for some people. But yeah, I'm thinking about Poloniex. Same thing. There are a few different tokens you can trade with leverage on there. But I remember a time. I mean, I was slipping up. Had a busy week. I'm running around, and I started getting those messages. Those little notifications like, "Hey, you're within 10% of getting called right now. You need to figure out what's going on. Hey, you're within 5%, dangerously low now." And when you get to these low numbers, remember Bitcoin and crypto is a volatile market. 1 minute you could be in the green, everything could be perfect on your margin, and then 30 seconds later, a minute later, something happens and that thing just drops to the red, and it's like, hey, you're about to get called for liquidation right now. Either put more money in here, change these settings, or pull out, but you're about to get called. So again, leverage trading, margin trading, you should only do after you have some experience. We have videos on our YouTube for this as well that teaches you how to do it. Quick comments real quick. Let me see. A. Kent said, what do you think is the next application of cryptocurrency? Currently, we have the financial aspect of cryptocurrency, but what do you see the next major move in the space? I'm actually going to answer that with the next article because the next article kind of answers it. But for me, it's kind of what I keep pounding on is transparency in government. I think that's going to be the biggest application of it beyond money if people will get on board with it. But we'll get on that real quick. Let me finish up these last few. Getting rich quick is easy, right? In legacy markets, and which one is this? What number is this? 1, 2, 3, 4, 5, 6. So I'll fly through these last 4. Getting rich quick is easy, right? Legacy markets, no one expects to get rich. In the crypto markets, people are looking to turn a small sum of money into their retirement, which is unrealistic. I mean, we've worked with people where they've invested $25,000 and 10 days later, they want to know, is there any way to get that 25,000 to 40 or 50,000 or to 100,000 within 10 days, people? Like, this is real life. And I'm not talking about just some guy off the street who has some savings. No, I'm talking about working professionals, people who've invested it in the traditional markets, people who are late 30s, early 40s. This is what I'm talking about. This isn't the person who's the poor person over here or the super wealthy. This is supposed to be the educated college graduate, mainstream American. This is how they think. We've worked with those people, I'm telling you. And they have literally been like, oh, here's $10,000 on day 1, day 2. Wait, your trading strategies, this is to make us $40,000. Like, what are you talking about, man? Like, you don't want to expect to get any of this in the traditional market. So for you to come over here into this market and say, hey, I expect to double or triple my money within a week or two, or even within a month or two, that's absolute crazy. Like, we should be happy we're getting what we're getting out of crypto. This is great. This is a blessing. But there's a reason why all these institutional organizations are coming in trying to heal the market, as so they say, right? Because it's not normal. This is not a normal thing. Even today, when you see Bitcoin is up or down 2% or whatever, that's not normal, people. 2% is a lot, right? It's just so normal in our space. But when you're talking about getting rich quick and doing it easy and all that, those are a lot of people who fail because they come over here with those expectations of 2 weeks to a month, I'll be a very wealthy person. So, and last thing also, those barriers to entry, where we talk about that leverage trading, this is why I'm anti-government in crypto space, because these barriers of entry that are non-existent in crypto, which says, hey, I can turn $10,000 or $10 to 1,000 with leverage, or I can get rich quick. These regulators, and with the help of the Gemini twins and Coinbase's Brian Armstrong, they're trying to come in and make all this illegal. They want you to say, oh, hey, you're not an accredited investor. You should not be able to go in and do this. You haven't taken this college course. You shouldn't be able to, like, none of that has anything to do with money, as we know, because it's already been happening. But this is what they're doing, and this is why I want to push them out. Is it fair that some people will come in trying to get rich quick and lose a lot of money? No. But some of those same people, you remember they said 95%. We have another 5. Some of those same people will come in and they'll actually turn that $10,000 or $10. I don't know why I want to keep saying 10,000. They'll turn that $10 into 1,000. So I enjoy this non-existent barrier of entry in crypto. I think it should continue. Again, we're already starting to see it dissipate. But hopefully with things like Bakkt and all these other institutional things, that will keep regulators busy with those platforms and away from these things that don't have the barriers. Crypto is not a safe investment. Of course, this is a very short one. They say an inexperienced person is far less likely to go broke buying a random stock than they are buying any available asset in crypto. The stakes are higher. Crypto is not a safe investment. It should only be a small part of someone's overall portfolio. All right, this is one of the ones I disagree with. Nothing is a safe investment. That's why you're investing in it. You're hoping. I don't care how much due diligence you're doing, you're hoping. All right, like, what's the best investment out there, right? It doesn't matter what it is. It kind of goes along those fundamental analysis. You can have the greatest, you can have the best investment. You can have, let's talk about Tesla, for example, right? Or Ford, when the cars first came out. If one of Tesla's first cars were to blow up on a busy freeway in front of a bunch of people, you think they would still be a popular company? No. So nothing is a safe investment, people. Like, we need to get that out of our heads. There are no safe investments out there, okay? You can't mitigate all your risks. Some things are going to be risky. Second thing apart about this is it said an inexperienced person is far less likely to go broke buying a random stock. No, an inexperienced or an experienced person is far less likely to go broke if they don't use all their money on their investments. I mean, that's pretty easy. That's 1 + 1 = 2. Use discretionary income, whether it's crypto or your traditional investments. Discretionary as in, if I were to miss this money tomorrow morning, I wouldn't care. Would I be a little perturbed? Maybe, whatever. I could have used it on whatever else, but it won't ruin my life. It won't really change my life, right? That's the money you should be using on investments, period, across the board. There aren't any safe investments, and you can go broke if you spend your money on anything. So I don't really agree with that one, but I get it. He needed 10. He had to fill the space. I'm with it. Here's another one. I needed 10 and fill that space. I get all my trade advice from a cartoon on the internet. It should go out saying, but in the crypto, it definitely does not. Never base your decisions on the advice of those who don't have to deal with the results. I mean, it is that simple. It was crazy to see how many people went after Bitcoin trade when the whole BitConnect thing blew up in their face. Granted, he, like others, were pretty much pumping it, but it wasn't his fault. Again, I used to watch some of Bitcoin trade. I mean, I've seen a couple of his videos, right? I said what's up to him in chat. Never in my life have I bought BitConnect. I know some people have. I think Bitcoin is actually about like $100 of it back in the day or whatever. But regardless, you don't, just because they're telling you that, you shouldn't take advice from it, right? Especially if the people are still, at this point, we get it, back in the day, people were hiding behind avatars and fake names and all this other good stuff. And maybe they have good information. I'm not saying they don't, because some of them actually do, but make sure you're doing your own due diligence. You're verifying. You're not just seeing something and believing it and running with it. And then later saying, burn the likes of Bitcoin trades and the crypto Nick at the stake because they told me to buy this and I followed them. Come on, be an adult, put on your big boy and big girl pants. And if you lose some money, you lost some money. If you made some money, you made some money. It's pretty much that simple. Traders do not average down. Common grade mistake many traders make is averaging down, buying more of the coin as the price drops with the logic that is a good thing is now cheaper and even better bargain. This logic applies to investing, not trading. This one was a really good thing. And they're right. Traders don't average down. If you're investing, makes sense. As the coin gets cheaper, all that good stuff, you buy into it, you hold. But unless you're talking about some mid-level, I'm waiting 2 weeks, maybe a month before I make this next trade. Then yeah, for the most part, you shouldn't be averaging down, especially as a price. Now you can have a buy-in point. We've heard some people say when Ripple hits 22 cents, they're going to buy back into it at that point. That's a little bit different. Averaging down is saying, oh, I'm going to buy Ripple from 27 cents to 26 cents to 25 cents to 24 cents to 23 cents to 22 cents. Like, no, if you're actually trading, you don't do that, because all that money that continues to go down could have been used on another trade. Instead, you want to actually just wait until it hits that mark you're looking for, whether it's that 22 cent mark or that 30 cent mark, whatever, and trade that way. Again, that logic does apply to investing. And last but not least, risk management is everything. This is a big one too. Risk management is boring, as they say, and it is, but it happens to be the most essential skill necessary to be profitable. Understanding how much to risk on a trade and how to properly balance a portfolio are exponentially more important than entries and exits. Learning this takes time. Most new traders are broke before they understand risk. Most people would be far better off slowly investing a small percentage of their entire portfolio in crypto and in Bitcoin in particular. Don't be fooled by the avatars on Twitter. Trading crypto is hard. The last thing I will say about this, risk management. This is true. It is boring, but it is important. And it's not just risk management on per trade. It's on your entire portfolio, right? How much of this portfolio do I want to put toward whatever? How much do I want to continue trading after we made some money? And more importantly, the pump and dumps. It's something that this person doesn't mention. Beginner traders, you got to mention pump and dumps because they are attractive. All right. They are very attractive. They're all over Twitter. They're all over Telegram. They're all over Facebook now. They're everywhere. The pump and dumps are real. I mean, you remember the United States government came out last year and said, we'll give you $100,000 if you snitch, if you tell us who these pump and dump groups are and these peoples are, right? They were giving away up to $100,000. Pump and dumps, while they're kind of terrible, it kind of goes back to what I said about the TA, where in reality in 2017, if you were to buy a coin and sit on it, it was going to pump. You just had to be patient. But pump and dumps, I want to mention that because I know regardless if someone tells you to do it or not to do it, most people are going to try it anyway because it is very hard not to try, right? Risk management and pump and dumps are important. You have to understand pump and dumps. It's something I can go in a whole soliloquy about, but the bottom line is this. Most pump and dumps already have pre-sale prices, which means they're pumping it to you all in the crowd. And the minute it starts to pump, they're going to sell their coins out of there once they reach their target, right? Usually most pump and dumps have 2 pumps. A lot of people are actually doing that intentionally because they want to make sure some of their people in their pump and dump group aren't left holding the bag. They actually want them to have a chance to make money as well. So some of the things you'll see with pump and dumps, they'll have 2 pumps. Maybe the second one will be higher. Maybe it'll be a little bit smaller, but they'll usually have 2 pumps. But the risk management is important because not all pump and dumps are bad. I'll tell you what, I mean, there are some groups out there, some of the pump and dump groups do a pretty decent job, people. And they have a lot of Twitter followers. What they do is that they'll get 10 or 15 of the top Twitter and YouTube people out there, and they'll all shield the same coin, same time, same day, and then they'll pump it that way. The reason why I say risk management is important here and not to just totally shun any pump and dump is because you still can make money, right? You just need to know how much money you want to make. If you know a pump and dump's coming at 4 p.m. today or whatever, or 7 p.m. Eastern time, and you already know off the bat, like, hey, this thing is going to happen really fast and I won't make 100% returns, right? That's the key thing, risk management. Maybe I'll put in some of this money. Maybe I'll put in 2% of my portfolio and hopefully I can make 7% off this pump, which is fairly easy in crypto. You put it in, you get your 7%, you pull it out. You don't worry about, well, it's going up 20%, it's going up 40%, it's going up 60%. Oh my God. Like, no, you go in, if you do it, you get your 7%, you get your 10%. I mean, it's literally like what we talk about here in crypto, it's the base hits. Get your base hits and pump and dumps. Risk management. Do not go in there hoping for the home run because that thing is going to go down quicker than you expect. Then you're going to sell it when it starts plummeting, and then you're going to miss the second pump once it happens, and then you're going to buy back into that dip as the second pump is ending. The next thing you know, you're holding a coin for another 4 or 5 months until whatever random group decides to come around and use it up again, right? So risk management and pump and dumps are important too. All right, last but certainly not least, I just realized I didn't even have this on the whatchamacallit screen, on the article screen, so pardon me. Let's see, Madam Crypto says still good profits in OTC trading. A good point, Madam Crypto. It's a shame local Bitcoins isn't what it used to be ever since the government took over. But yeah, if you know people who want to trade over the counter, people, I mean, peer to peer, hey, I got this bag of money, you got Bitcoin. Of course, make sure you know them and it's not drug money, because if it's up to the United States, everyone who does peer to peer trading without their knowledge is all criminal activity and drug money. But that is a very good way to make profit in OTC because you get to set your fees. If it's somebody who wants to buy 10,000, 100, I mean, I met a guy who's out here in LA. Let's just say he does some trading for some very high value Microsoft executives, right? So a lot of money this guy has traded, right? But he gets to set his fee. If someone's giving him $250,000 or $500,000 or $1 million to trade Bitcoin over the counter, he can tell them, all right, well, that'll be a $10,000 fee or that'll be a $50,000 fee. And usually the people who have this type of money who are doing these over-the-counter trades don't care that much about the fee because they're just like, whatever. Like, give me the Bitcoin. Sounds fair. I'm not going to learn to do this on my own, whatever. So, yeah, good shout on that, Madam Crypto, for sure. Jizzy Max said they want to get rich quick, then cry when they buy the two. I can't see it because I'm so zoomed out on this thing. So pardon me. They want to get rich quick, then cry when they buy the. Yeah, I can't see it. This is terrible. Sergeant Crypto said investing is a lot of hoopium. Pump and dumps are great if you're on the inside. Yeah, for sure. I mean, I'm definitely with you. Don't do it unless you're definitely on the inside of one of these things. But yeah, you can definitely get wrecked on that. I see that too, Cryptonomics. Jizzy Max said that's the problem. Everyone thinks they're on the inside. That is also very true as well. Everyone does think they're on the inside. When in reality, for a lot of these pump and dump groups, the inside is them, their best friends since they were 1 year old, and their brother or their sister. Everyone else could whatever, right? So you got to be careful with that. Malik Howard said everyone has tried at least once. That's why I wanted to bring it up. This is supposed to be an article for beginners. And yes, I think every beginner out there has tried a pump and dump at least once. And Cryptonomics, I'm going to end this last comment on this. Is hilarious. Nobody's on the inside, LOL. That is more than likely true. All right. Last but not least, this kind of answers A. Kent's question as well. It's like, hey, what other thing besides crypto do you see Bitcoin going? Excuse me, besides the financial markets, do you see Bitcoin and crypto going? Bitcoin is a truth machine, says Gold Bullion International co-founder. Gold Bullion International co-founder Dan Tapirio has said Bitcoin's value is a truth machine. He made his regards during an interview with business news outlet Alpha Week published on September 10th. He said, quote, "What it is an invention, and I think it should be referred to as an invention rather than all the other things. It's what it really is, it's a truth machine. It's a way to eradicate all fraud or lying by human beings." He went on to say, Bitcoin really is just a reward that miners get for guaranteeing the security of the framework of the network. That's what it is. And then he also said that he noted that the system is now 10 years old and has a good track record, all of which contributes to his will to ask, quote, "What is a security platform like that with that track record worth?" He basically said it'd be worth hundreds of billions of dollars when asked what it will cost for a company to develop such a system, which is very important when you talk about blockchain technology. People keep throwing around the world blockchain technology. And again, I always ask, which blockchain are we referring to? Keep saying blockchain technology, but the only blockchain technology that I know that has been working almost to perfection for 10 years is Bitcoins. So when I hear blockchain tech, I'm just like, well, which one? You got this guy here saying for a company to develop such a system, he believes it will cost hundreds of billions of dollars, touching on the number of work hours dedicated to development and maintenance of Bitcoin in the ecosystem. He also added, could a company even develop that? Maybe Satoshi realized it could only be developed slowly over time in a decentralized way. Something we always talk about when we talk about Bitcoin devs. The beauty of the Bitcoin blockchain is open source. Everyone around the planet, including you and I, can look at it right now and go work on it and submit proposals. Now, will those BIPs, Bitcoin improvement proposals, be accepted? Maybe not, but we could at least submit one, right? And that's also a very important term for those who want to become Bitcoin professionals, because that is a question on the test as well. But, I'm glad he put it out there. Like, really think about all the work that went into Bitcoin blockchain. It's 10 years old now. It's decentralized. You have the smartest computer programmers on the planet working on it at the same time. Really? You think JP Morgan's core blockchain is going to rival that? You think Bank of America's whatever else is going to rival that? All these other blockchains popping up. You think they're going to rival that with their own in-house team of 10 to 20 employees that they've had for I don't know how long? Maybe a couple of new ones they pick. Hey, if you got lucky like the one company, you might actually be able to pay and get a Bitcoin developer. I mean, how much $500,000 is that going to cost, right? But let's say you get one of them. How long and how much money will it take? Again, some of your people are going to sleep on this. People were working on this around the clock across the planet for 10 years. So again, I think this is an important thing to touch. And then even more important, when as A. Kent asks, where do I think it's going? I agree with this. It's a truth machine. It is the truth machine. And if citizens around the world accept it as that, and we start to implement it in government and in regulation, all the other stuff. You talk about taxes. Okay, I'll play this taxation game. I'll let you tax me, but I want to see where every Satoshi goes from the moment it leaves my wallet to the moment it gets distributed out across government. If the government was cool with that, I'll be cool with taxes. But we know they won't be cool with that because there's so much lying, corruption, and stealing going on. So I think that's the real future for Bitcoin, especially the Bitcoin blockchain. I get it. I think it's also should just be known as an invention. And Andreas Antonopoulos talks about this. He says the internet of money for a reason. This is the beginning of the internet of money. It won't just be money. There'll be many applications. But for me personally, I do think the biggest application will to be, the transparency part of it. I mean, there is nothing more transparent, and we still haven't even implemented it yet. So if anything, that's something we need to push for. Whenever people talk about, taxations and all the regulation in the crypto space, listen, how about that be the new narrative? Okay, we're fine with all the regulations, even though they're going to be BS, and you come up with them Wednesday morning and Friday nights. We'll take the regulation. We'll take the taxes. We'll take the blood test we have to do to sign to exchange. We'll take the AML, the KYC. We'll take everything the government has to throw at the space. All we ask in return is that you all do every transaction on the blockchain where we can see it. I think that's a fair trade-off, right? Let's see if it happens. That's the show for today. I'll see you all tomorrow. I'll fix that title and the comments and all the notes and stuff. And until then, make sure you smash that like and share button and listen to us on our podcast, iTunes podcast, Google Play Music, and Spotify, iHeartRadio, all that good stuff. As always, thanks for watching, and I'll be sure to see you all tomorrow. Cheers.